Welcome back. The Central Bank of Nigeria kept its benchmark interest rates at 14% on Tuesday and also maintained existing cash reserve ratios for commercial banks at 22.5%. Other monetary instruments were also retained at their present levels. Now, these decisions come as the nation tries to get out of the present economic challenges. How will these decisions help the country at this time? Let's hear the views of economic analysts from outside our shores. I'm being joined by the senior macroeconomic specialist at Ecobank Research London, Gaimin Nonyanin. Good afternoon, Gaimin. Thank you very much for joining us.
Good afternoon.
The CBN Monetary Policy Committee left all its instruments unchanged yesterday. What were your immediate thoughts when you heard that news?
Well, first of all, I think we should know that Nigeria is currently facing a very difficult environment, and the CBN is in a dilemma because it can't reduce interest rates because inflation is spiraling out of control. We've just seen headline inflation approach almost 18%, as well as core inflation is now above 17%. So it can't reduce interest rates. And then at the same time, the country is currently in a recession. So it can't also hike interest rates, because if it does that, then it just deepens the contraction in economic activity. So I think this is the right choice in terms of stabilizing the imbalances in the economy and just see how things pan out following the interest rate hikes that took place in July.
Now, what do you think are the expectations of portfolio investors in terms of Nigeria's Eurobond, Treasury bills yields, and Naira bonds?
Well, the tight monetary policy stance, of course, it will go some way towards helping to attract investments into Nigeria, especially given low interest rates in OECD markets. Then at the same time, the main concern will remain on the foreign exchange. I think that the CBN needs to allow the currency to devalue even further, because then it helps for price transparency and price competitiveness. But as long as that is an issue, I think there will always be investor concerns on the Nigerian markets.
Now, economists at Exotics Partners there in London believe that looking at the Naira now, it's no longer overvalued, but rather it's at its fair value. Do you share same views?
Well, I think that for a significantly import-dependent country like Nigeria, I think that the currency needs to devalue even further, because almost everything that people consume in the economy is imported. And so what we're seeing now, I don't think it's the Naira at equilibrium. I think it's being managed to some extent by the central bank, and that's the reason why we're seeing a depletion in the foreign exchange reserves, because the central bank intervenes in the interbank foreign exchange markets every now and then to try to support the currency. So it's not allowing the currency to float that was the intention, as the initial intention. Instead, it's operating some kind of managed floating system, which does not help the currency to reach full equilibrium. So I think that further devaluation is necessary, and it needs to allow, because it doesn't give the real picture about the Naira. So it's clouding the price transparency horizon.
Now, for a country going through a recession, just shortly before the central bank came up with their policy decision, the finance minister talked about the need to bring down this interest rate, and your views is that the tightening measure is good enough, for the country as it is. Now, there seems to be some kind of disconnect there, or rather some kind of disagreement between the central bank and the finance ministry. What kind of synergy do you expect to see the fiscal authority and the monetary authority having in order to actually help the country come out of its present economic condition?
Well, yeah, it is a difficult situation because on one hand, the country is going through a recession. So yes, on the traditional response would be to lower interest rates to help to stimulate the economy. But at the same time, there's so many imbalances, especially given that inflation continues to spiral out of control. Real interest rates are in negative territory. So that those factors, the real fact that the real interest rates are negative and inflation is spiraling, it doesn't make your country attractive. It does not make Nigeria attractive enough to help to attract inflows from outside. And I think at the moment, Nigeria needs as much inflows, foreign exchange inflows as possible. So if the central bank was going to reduce interest rates, it would not be desirable to investors to invest further in the economy. And I think that in order to help to bring some kind of semblance between fiscal and monetary policy, fiscal policy needs to be more robust. I think the fact that we've got spending now, the 2016 budget spending now being implemented, I think will go some way towards helping to boost economic activity. I think there needs to be more tax incentives. There needs to be some kind of robustness in the way the government spends in capital spending, because that will help to increase activity in infrastructure, in sectors that will help to boost employment and allow people to get employment income and spend in the economy. So I think the fiscal policy has to be more robust, whilst monetary policy has to remain tight for now, given all that's happening in Nigeria.
All right, thank you very much for your time, Gaimin. Gaimin Nonyenin, Senior Macroeconomic Specialist at EcoBank Research, London. Now let's cross over now to Nigeria's debt market and see how the yields are doing after the MPC's decision. Dipo Adeoye, fixed income dealer at UBA Group, joins me now. Good afternoon, Dipo. Hello, good afternoon, Dipo. Yeah. So what is the yields? What are the yields like after the CBN's rate decisions?
Well, after the CBN pronunciation today, what we witnessed is a drop in yields across board, especially in the bond market, which is a signal, a positive signal. In our view, what it means is that investors are looking at or interpreting what the central bank has done as a means to expansionary or growth in the near term.
Now,
the yield depressed today compared to yesterday.
Okay, so there was a Treasury bill auction today. What's the outcome?
The Treasury bill market, we also witnessed some bullish activity, but I guess investors are still cautious because we are still not sure if the CBN is still going to come in with OMO auctions in the near term. But I guess from next week, it will give us a clear direction as to whether we'll continue to mop up by way of OMO or the yield level are just going to stabilize and gradually move towards a downward trend. But generally speaking, the interpretation is positive, and we've witnessed bullish activity across the interest rate market.
Right. Okay. I was actually asking about the Treasury bill auction today, the outcome.
No,
the Treasury bill auction at the primary market.
Oh, the Treasury bill auction today, the auction is still ongoing. It's not out at the moment. But the view from the interpretation of the view from what we've seen in the secondary market is that yields are likely going to be lower than where it was at the previous auction.
All right. Thank you very much for your time, Dipo Adeoye. We'll take a quick break now. When we return, we'll continue with the program. And, of course, we'll look at the activities at the Forex market. Do stay with us.